So if all of your requirements have been met on your personal checklist, there's a checklist within the group, within your beginners folder, that you can use. But, you know, people who have already been trading, they kind of already have their own style. So you just want to integrate the things that Robert has given you into your style, and to make you a better trader or a more effective trader. Are you familiar with finding your indexes?
I am actually.
Okay, awesome. And so what about finding highs and lows? Your highs and lows and things like that.
I am to an extent. I noticed, just for instance, I don't know if it's too early in the week and the market just hasn't made any moves yet, or I'm being totally obliterated, like when it comes to, you know, setting up my charts. You know, I'm not. That's why I don't think I'm doing them right, because, you know, I'll have a market overview, or, you know, I'll think that the market's going to buy and then it actually goes the opposite way. And, you know, I'm not sure like what I'm doing wrong.
Okay. No problem. So first thing that we do, since you are familiar with your indexes already, and positive and negative and what to look for on that. So remember, if it's greater than 10%, then it's going to be a true trend for that currency pair. So like the Canadian dollar was 12%, so it's headed in a downtrend for the Canadian dollar alone. As a pair, you would have to also look at the DXY, or the US index, and the US index is at 51%, so it's very strong on the positive side. So it should be leading the pair, because the USD is the dominant pair for this particular currency group. So USD CAD, UCAD, the dollar is the dominant pair. So as you can see, with the dollar being the dominant pair on this particular currency grouping, it's in a buy, because the dollar is at 50+%, and then the Canadian dollar is only at 12% negative. So therefore it's in a buy. So what we're looking to do when we're setting up our charts, the way Robert has us do it, is you want to start on your daily chart, and you want to grab your horizontal line. You want to get the burgundy. We always use burgundy for daily. We just kind of go in order of the colors that TradingView already has established. So burgundy being for the daily. If today was Friday, you would want to find your immediate high or your immediate resistance level. So if today was Friday, the market is closed, no candles are actively moving, we would normally set it up here. And you want to use a straight line. You want to set it up there. You want to get as close to the top of the candle as you can. And then you want to come and you want to find your low, which is your immediate change of direction. So we're always looking for the immediate change in direction. The easiest way that I've found to be able to explain it is, if you draw the line on all the candles that are going down, when you hit the bottom of it and then it turns up, there's your immediate change in direction right there. You can start from the other side too. That probably would be best, but you can start from this side and go down, and then boom, here's your change of direction because the market was going up. So that's one way that I guess now I'm going to try to explain it to people, because some people are having a hard time finding the immediate change of direction. They're looking at little changes here and little changes here, which if the market was back here, that would be accurate. But it just seems like that would be the easiest way for everyone to be able to find it.
I think that's where I was having trouble with the pullbacks, and marking the pullbacks rather than, you know, Change in direction.
Yeah, so when the trend actually changed. Yes, ma'am. Okay, so on the daily chart, after we found our resistance and our support, which is our high and our low, then you want to drop a fib. You want to drop a fib on your charts. And you want to go in the direction of the chart. So this is now in an uptrend. So you want to go from your swing low to your swing high. And I'm going to take a look at your Fibonacci here in just a little bit to make sure you have this same setup. This is the setup that Robert has us do for our fibs.
Right, okay. It's reversed, right?
It is in reverse, yes, ma'am.
Okay.
All right, so we're always wanting to drop our line. Once we find our highs and lows, you always want to drop a line on the 38.2. And it's going to be a dotted line. He uses a dashed line for that, just to distinguish so you don't have so many lines, solid lines. You're like, well, what is this one for? So 1.266, 26667. All right, and so this is considered the smart money entry point. So that's why we use the 0.382.
Now that's where you would enter the market, or is that for the daily chart, that is your take profit zone area?
So the daily chart is for direction. So I'm just gonna write these numbers down real quick. 1.26667. So daily charts always for direction. That's where we want to find what direction the market is moving. So for the day so far, the US CAD has been on a buy. It's been on a buy for a number of days, actually. 1, 2, 3, 4, 5, 6, for 7 days. So probably started sometime last week, like maybe last Monday or Tuesday. It started, the trend reversed, and then it went on a buy. So this is going to be your strongest support and resistance. So anytime you're in this area, your candles are in this area on your charts, just know that when you see your burgundy lines, you are looking for the chart, for your candles to either break through on the support, which is meaning that it's going down, like it's going down, or you're looking for it to break through on your resistance, which means it's going up on a buy. So on your daily chart, if this candle comes in and closes higher up here, then you can look at it and say, okay, well, we just broke our resistance. And then especially if the candle comes in, for instance, tomorrow, even higher, it's broke the resistance. So it's on its way to set a new high and a new low for the day. So after your daily chart, you do want to go to your 4-hour chart. Okay. So on your 4-hour chart, your 4-hour chart is for your momentum. And basically, we're just going to establish what the high and lows were for the 4-hour chart. We don't drop our fibs, so you won't have a 0.382 for this one. So we continue the order on your colors. We do the red and just 2 solid lines. So you want to go to the top here, and then on a Friday, you would use this as your low. Anytime, if you are marking your charts during the week, sometimes you're not going to be able to use your immediate low, like right here, because it's during the week and the candle is still moving. So you would come to your next lowest low, which would be here. And see, I did the little lines so you can see where the market changed directions. But and then again, on this chart, you don't do the 382 just because it's only for momentum. You only do them on the other 3 time frames, which is your daily, and then you do them on your 1 hour, and then you do them on your 15-minute. So the 1 hour chart, is where we find our take profit and our stop loss. Right. So this is where you are going to look for your take profit, which is, you know, the money that you have made, or the money that you've lost and you want to kind of stop that somewhere. So you are going to, like, the same thing. You're basically doing the exact same thing over and over again for the 4 charts. The only difference is the 4-hour chart does not get the 382. Okay. So again, we stay on course and we do the next color in line, which is orange, for the 1 hour. And we have our resistance. And then if this was Friday, you could utilize this one as your support on a Friday. On a weekday, if you have to reset your charts, you don't really want to use that because the candles are moving, and this is an hour chart. So every hour it's going to change.
Okay, so I have a question. I noticed that last week when we did UJ, we were projecting that the market was going to sell at some point after it, I guess, didn't learn the bullish accumulation zones or the bearish accumulation zones. I'm not quite that far yet. We projected that at some point it was going to turn around and be a sell, but of course, the U.S. dollar is strong this week. It's making new highs. So at that time, will we reset our charts?
The only thing you should have to have reset on Sunday or Monday would have probably been your 382s to adjust for the buy. That probably would have been the only thing. Now, you can reset your chart once your setup has been blown. So the USD JPY did blow Friday setup because it went higher than anticipated. So there were no highs and lows already established. So Robert did go ahead and reset up USD JPY for where the candles were currently on Monday.
Okay, so he just made his high higher pretty much and reset the fib. So
no, he cleared the whole chart and started from scratch.
Okay.
All of the work that he had done on Friday was now voided because there were no candles in play in that area. Okay. So it completely went above everything that was there. So, yeah, in that case, you would reset up your charts. If you have, say, for instance, your 15-minute is blown, but you still have a high and some lows above it, like your 1 hour high is still above it, or your 4 hour high is still above it, it's still playing in your setup at that point. It's just when it completely leaves your setup behind, then you gotta, consider 1 or 2 things: not trading or adjusting, which is what we're supposed to do, because we're supposed to react to the market.
Mm-hmm.
So we never really predict it. We just make assumptions as to what it's going to do. And then we wait for our first test, and then we wait for our retest to see if that's what it's going to do. And then if it's going in the direction that we projected, that's when you would get in on your trade.
Mm-hmm. I noticed a lot of pairs. I stayed out of the market pretty much this week because I noticed a lot of pairs went opposite my projections for them. So I had to do that a lot this week. I didn't reset my charts because I was just going to wait until they came back into my step. But now I realize that once they break out of the support and resistance zones, especially like the daily and the 4 hour, once they go well above those, it's probably time to reset the charts now.
Yeah, because when we did UJ on Friday and came back into it on Monday, pretty much everything that we had set up was like way down in that area. It was like way down in this area below this line, and the candles was up there, so we had nothing to go by because there was no setup for it. So Robert just, did a new setup.
Right. Okay.
And he said that's kind of the only time that you should be doing a new setup is when the market has surpassed what you've already done. Nothing you can do at that point but do a new setup.
Right.
All right. So on our hour chart, we have a downtrend. So when we drop our fibs, you do want to take into account that it's on a downtrend, and you want to mark it. It was bullish. The date was bullish. And I write down everything as I go, just because I have a bad habit of not being on the computer. Like I don't sit at the computers as long as I used to because I worked at a job where I sit at computers all the time. So I do a lot on my phone. So it's easier for me to have it written down, or go to the Trading View app. You can do that too.
Okay. Keep notes in your Trading View app, or I know they have like a note section on here somewhere. Okay. And your notes, as far as your notes are concerned, you put the price at which your highs and lows are, and also your 38.2 price as well.
In my notebook, I just write down what I'm doing as I go. Like I write down my 0.382s. I write down my take profit, my stop loss. I write down my indexes. I write down if it was bearish or bullish. And I just kind of write it down just as I'm going, because at the end, I do like one big text box of everything. So when I pull it up on my Trading View app on my phone, the exact same chart that I had on my desktop is the same chart that's on my phone.
I see.
So it saves it for you.
I didn't know I could download a Trading View app. I'm going to do that.
Yep. And then you also want to download an app called Call Levels.
Okay. And Call Levels, what's that for?
Okay, so Call Levels we use because we don't put in a stop loss and we don't put in a take profit, because the brokers seek out stop losses and they will wick you in on your pending orders. So say for instance, if this orange line was my pending order, then you probably noticed that you'll get wicked in and then it runs the other way.
Right.
Yes. So that's because the brokers are searching for pending orders. And they already know that most people that are retail traders like you and I, will only tolerate an X amount of loss. So that's anywhere between 25 and 50 pips. So what they do is they will wick you in, and then they will run the other direction up to 50 pips to make you jump out, because at that point they are making money because you're losing money. So that means they're going to make money because you lost money. So that's the name of the game.
Right.
So that's why you never want to put in your stop loss, your pending orders, or your take profits, because the broker sees that, they know what you're thinking, and then that gives them an opportunity to come up with a game plan as a whole so that they can make money and you don't make money.
And so this call level app that basically notifies you or lets you know whenever you're coming, it kind of gives you an alert whenever you're coming up on an entry, or?
Yep. So if you are waiting to enter in to a trade and you're looking to enter in at a particular number, you would find the pair that you're working on, and then you would enter in your numbers that you are waiting for. And then when the market reaches that number, you'll get an alert. At that point, you do want to go and check your indexes. You want to basically run through your chart and make sure that it's something that you want to enter into first before just hitting, the market execution. You do want to look at it and make sure that it could be on the first test. And we always wait for the second test. We always wait for the retest before we enter. So your first alert could be just the first time the candles reach that area. And you always want the candles to come back and then, give you a confirmation that it's actually in that particular trend.
Okay. Thank you. Sounds like a pretty good app for me, because I know that TradingView, because I'm not a paid member, they only let me do one alert, and it's like I got so many alerts that I need.
Oh, okay.
I'm always like at my computer trying to look to see where the market's at on different pairs, and it's kind of like it's kind of nerve-wracking because I can only get one alert at a time.
Yeah, I can understand that. All right, so the next chart that we use is going to be the 15-minute chart. And we just go in order again. Next color is yellow. And we're doing the same thing. We're finding our immediate high and then our immediate low. I didn't use this one because it's already broke it. I didn't use this one because it's already right there. So the next best option on this particular pair is going to be this one here.
Okay.
All right, so now that we have the 15-minute support and resistance, you're going to drop another fib, because we drop our fibs again on the daily, the 1 hour, and the 15-minute, and you drop it in the direction of the candle. So this is a downtrend. So the 15-minute is also bearish. So we do when we're going on a sell, we're looking for the sell. We always want to start at the resistance and go all the way down to the support. And so that's going to be 128.8651. Okay. And so the 15-minute is where we find our entry. Now the thing about that is that we find our entry on the 15-minute chart, but we do not enter into a trade on the 15-minute chart. We enter into the trade on the 1 hour chart.
Okay.
Okay, so after we have all this marked up on each chart, the daily for direction, the H4, the 4-hour chart is for our momentum, our 1-hour chart is for our take profit and stop loss, and then our 15-minute chart is for our entry point. You do want to, at that point, make a decision whether you're going to go with the trend, which you should always be going with the trend. If you're going to go on a long or a short. Now, a short just means that you are selling. A long means you are buying. If you're going on a short, like what's right here, the sell, you always want to go on a 3-to-1 ratio. So you're going to come over here and you're going to click long or short, pick your position. And once you have your position, you just drop it on where you're going to enter. At that point, you want to make it a 3-to-1 ratio. Perfect. So once you have your 3-to-1 ratio, you're just basically saying that I'm going to risk 17 pips to make 53 pips. So if you was on a 0.01, that's 10 cents. So you're risking $17 to make $53. Well, $5. I'm sorry, you're risking $1.78 because it's 10 cents a pip. So you're risking $1.78 to make $5.34 on a 0.01. If you are on a 0.1, you're risking $17 to make $53.
Okay.
Okay. So do you have any questions about this part so far?
No, I'm pretty familiar with what we're doing now because I've been in quite a few setup trainings and stuff like that. So
okay,
I'm with you all the way right now.
Okay, and so you do know that once you come here, you'll see on the side the 1.28828. That's going to be your stop loss, and then the 1.28116 is going to be your take profit. Those are numbers that you can enter into the call levels app so that you can get an alert saying, hey, I'm at the 1.28828, I might need to consider getting out because I'm down, or 1.28116, I've reached my goal, or it's gone all the way down. I'm at my ratio standard. Do I want to stay in, or do I want to go ahead and take profit and call it a day, sit on your hands, don't trade anymore for the day because you've reached your goal, or see if it can go any further. But that's kind of what you want to do with your call levels. You want to let it alert you for your entry, your take profit, or your stop loss.
Okay.
All right. And are you familiar with the VMW pattern?
Yes.
Okay, awesome. Okay. So did you have any particular questions?
So that's I know you were saying that's market structure. The market moves in V patterns, W and M patterns. W pattern will be a double bottom. A M pattern of course would be a double top. I'm not quite familiar with why or understand necessarily how or why the market would move in a V pattern.
Because it starts everything. The V is what starts the W and the M. So if you look right here, this is an inverted V for an M. So that's why. So the V is really price fluctuation. So that's why the V is there. Same thing if it was the W, you have this leg here, then you're gonna have a leg up there, and then here, and then here. So yeah, that's what you're looking for. And then basically once you see that pattern of, just say if the market finishes and makes an M here, you're looking for it to break through the neckline, and one or two things is going to happen. It will either break through and continue down, or it'll hit the neckline and go back up. So that's what you're looking for. Now, it won't always be a perfect, how these are actually respecting well, we actually just put them on there, but you don't always will find a pair that will respect the highs and lows or supports and resistance and create perfect V's and M's and W's. They're going to look different, of course, because the market moves from side to side. So so let me see. See, it's not a perfect double bottom, but it's still a double bottom. It's just not perfect, but it hit the neckline and it broke out to the top. So that's kind of where they are. I mean, I don't get them either, but that's kind of what the market does, and I can see them. Like, I can see them. I've been for a while.
But is there like I'm sure there's not like a textbook like double top or double bottom, like are there like is there like a textbook like, oh, the one leg should close below, match the other leg but close below it, or like is there any like textbook plays on double tops and double bottoms that you know of?
What you're looking for is whatever happens on the left side, what happened on the right side. So if we go to the daily chart and look at it as a whole overall, this is called head and shoulder. This is called head and shoulders, or Elliott wave, I believe. Normally the Elliott wave is right after the bat. That's how I learned it. It's right after the bat. And here's your bat. So once you finish the bat, once the bat completes, then what you'll see is an up move, or you'll see a strong down move, either way. But it's gonna be right after. So instead of having the head and shoulders up top, you may have an inverted head and shoulders because it went to the bottom. I can't spot the inverted that well. I can spot it normally, like how it looks now on this chart. I can spot that just fine. If Zoom ends, I'll just throw you another link because I recorded this one, it only gave me the 40 minutes. So I wanted you to have your one-on-one recorded. But yeah, whatever happens on this side is gonna happen on that side. That's just how it works. You had like this strong up movement over here, and then it did the same down here, but it just respected, well, we set a new resistance. We're looking at this to be the new resistant area. And it respected it because that's where it turned around and it went up. So we're looking at its new area.